With 1 week left in the month of August, this is shaping up to be my worst month ever in terms of win rate. And it got me thinking, legitimately, how fucked am I? Is it time to hang it up? Is it time for a new strategy? Or should I do the exact opposite of what I've been doing? Like literally just build out a strategy that does the exact opposite of what I've been doing and reverse where my stop loss is for take profit? Should I be doing that? Because if I was, this month actually would be pretty green. Well, if that's what you were hoping I was going to say, I'm not going to be doing any of that. And that's the point of this video. By the end of the video, you're going to understand why. And if you've ever experienced something like this, I'd encourage you to hear me out. So there's a couple of key points and pillars that I want to get into and make sure we talk about in this video. And one of the first things that I think we should at least set the stage, set the record straight here. Win rate in trading does not equal profitability. So that means is a high win rate does not mean you're profitable. You might have a 65% win rate, but there's a good chance that you could also be risking a lot more than you're making on winners and be red. So that doesn't mean you're profitable. And when I'm talking about this, I'm not talking about like in a perfect world. I'm talking about like, okay, what are your actual stats? Like track it and actually get your stats. And what have you actually realized? Not, well, in a perfect world, I would risk 1 to make 2 or 1 to make 3 and it would be perfect. And I've got a really good strategy and I have a 60% win rate. Fucker, do the actual thing and actually track the stats and then come back after you have 100, 200, 300, 400, 500 trades. Like, I'm not kidding. Like then you can say, okay, I have a 65% win rate. Here's my average win loss, blah, blah, blah. But also, when it comes to that win rate and profitability, a lot of what I have seen in the past, hence why I wanted to at least talk about this, because there's not many people, in my opinion, that, or from my experience, not opinion, it's like what I've seen, just what I have experienced. There's not many people who, A, will be willing to talk about losing, which I think is where the biggest lessons and learning and psychology gains come from, like literally, like when you talk about losing, to like understand like conceptually, like how do I actually become a good loser, And they also, a lot of what you see tends to highlight wins. It's easy to come on and say, hey, I had a really good month. Let's post it. Let's talk about it. And then make people think, oh, that's how this person is. But month to month is very different, which I'm going to get into more of the details of that in a second. So when you see, the 80% win rate strategy, 90% win rate strategy, you can look up those videos on YouTube and that's all. You're going to see some crazy shit from some accounts that have never tied a face or P&L statements, any of that stuff to their account. They'll tell you this is an 80% strategy, set whatever, blah, blah, blah. And in theory, like it might be over a small sample size, but over the course of a large sample size with someone trading it or a bot trading it, what you end up finding, like this is not, new news here. Like what you end up finding is that we all come back to some sort of equilibrium to a degree. I think the subjective nature of trading is what allows the human element to be good. Because if you have a bot, you could make it work, but your numbers are not going to be, or there's a better chance that your numbers are be more consistent, but they're not going to be crazy. Like you're not going to have like, oh my God, a 90% win rate with a 2-to-1 risk reward, meaning I'm risking 1 to make 2. Like that's not going to happen. You're going to be a lot closer to 50%, a lot closer to a 1-to-1 risk reward. But if it's profitable, then just put more money in and let it do its thing. Like that doesn't matter. So win rate does not equal profitability. I think a lot of people understand that, but your win rate also can vary month to month. Like I am looking right now at a win rate of 6.67%, right? So sub 7%. However, this is over 17 trades. If I were to take you back or look at the year to date, I have over 228 trades to be exact. And I have a 40.72% win rate with an average win-loss of 1.8, which has been profitable to make with a sizing on a $10,000 account and a $25,000 prop firm account. It's made me almost $2,200. Okay? So that's year to date. Bigger sample size, more data. So I can zoom in and show you the 7%, 6% and say, holy shit, I suck. But also, that's me looking at a specific time in the data. And I don't know why I did that, but if I can go and I can find when I had a good, like I can go in and show you guys like this run back here in May, like early to like mid-May, and I can go, let's go do it. Let's go do it. Let's literally go do it. So it was back here from May 6th to like May 23rd. So if I go in there, this is great. You have 17 trades. So it's the exact same sample size. I have 17 trades. So see how I had 17 trades that I just took that we're talking about for this month that I'm making the video on? It's perfect. 17 trades in that span of time. I had a 70.59% win rate and an average win-loss of 2.18, meaning my average winner was 129 and average loser was $59.30. So I'm on a run. I'm on a hot streak. But what's important here, and I think this is actually a perfect, segue into risk management, where the money is made is the risk management. Because what I tend to find, and what I think you'll find if you do this long enough, you'll see that you can have a higher win rate, but your average win-loss will have to come closer to 1-to-1 or even could be below 1-to-1. If you have a lower win rate, your average win-loss to be profitable has to go up. You can even be a sub 50% winner, but your average win-loss has got to be higher, like I just showed you a second ago. In this case, I had the combination of both. I had a 70% win rate, which is not sustainable, in my opinion, with the way I trade. And I had a 2.18 average win-loss, which is, I think, sustainable, or around there, between 1.8 to, that's not that crazy, but the 70% win rate is a bit crazy for what I've seen. Maybe I can get really picky and I can have a really good year next year or I don't know. Maybe there's always ways, you can always improve. You're always striving to get better and to be closer to perfect, but you're never going to get there. And you know that, but there's an infinite ceiling. The ceiling is it's like the sky. The sky, when the people say the sky is the limit, like legitimately it is, because there's no cap. You could keep getting better and better. Although it's kind of like a law of, I don't say diminishing returns, but like you kind of like get really good. Once you get really good, you get going and then it kind of tails off. So like you can get incrementally better, which will increase your P&L ideally, but it will not be like drastic, like, oh, I'm profitable versus not profitable. Like that's in this phase of the curve. Like this phase up here, like, yeah, you're profitable, but you've been doing it for a while. Like, yeah, you can make some small gains, improve a couple things here and there, improve your patience, blah, blah, blah. Maybe take less trades. Maybe it makes you more money. Like those things are going to be incremental. They're not making like the big move. Another point I wanted to make was that a bad streak does not mean change everything, because what we are seeing, like what I think is a perfect example, right? Like, so we just looked at, or we're looking right now at the win rate for that span of time. If I were to go back to year to date, I am trading almost the exact, you can't make it exactly the same, because things will slowly change over time as you see things, and maybe you just start making a small adjustment here on where your targets are and stops and whatever. But overall, I am trading pretty much the exact same strategy. Well, not pretty much, the exact same strategy and the same way. Like it's because it's subjective and because I am the one that is operating it. Like it's not technically perfect. I can't be perfect, but I'm as close to perfect as I can possibly be. I have not done anything different. And so what I think is important is that with this strategy, I experienced that 70% streak that made a ton of money. And then I experienced this streak there right now that's losing me money. But what we saw was that we are down, for example, if I go back, not year to date, if I go to this month, we are down 722. That same streak of 17 trades when things were working made 1,300, which actually made almost double of what we're down. So when I look at that, I go, oh, that's actually really encouraging data, because when I have a outlier green streak, I made 1,300. When I had an outlier red streak, I lost 700, which means like the game of risk management and how I'm managing the risk is working. Like it's good, because if we keep playing this game and we have those streaks, and that's just what I signed up for, which is, that is what I signed up for, right? When it comes to trading, then it'll even out. Like at the end of a year, when you broaden the scope, when you look at the bigger time frames, when you broaden out, it evens out. You don't have to like get all caught up in this. So I'm doing something right. So it's more about the risk management, in my opinion, than changing the strategy or the win rate. You got to find what works best for you. And that's easier said than done. But ultimately, there's a million ways to go about this game. The problem that I see, and it's happened to me before, not as much now because I've seen this and I know it. Let me go back to this year to date. Inside of this graph, what we kind of see is starting the year off choppy, not, amazing. Had a good run in February. Then we kind of had drawdown for about a month or more than that, really, for March, and then even into mid-April. We were in drawdown. Actually, yeah, mid-April, we're in drawdown. Then we had a really good run from mid-April all the way through mid-May or end of May. Good run. June kind of choppy, or actually, sorry, bad end of June, and then decent July, and then so far bad August. But like, it's this game that, again, I signed up for. I know this is more of like the reality of what trading is versus what you want it to be, and you want it to be a consistent, oh, it's sloping up to the right, which, yes, if you look at this graph, it is sloping up to the right. Like, it's like a buy the dip almost type of graph. But in the grand scheme, what ends up happening is that in these green streaks, we can get a bit greedy. And in these red streaks, we could go into a spiral. And when you have the data to see that this red streak is literally a run-of-the-mill red streak, like it is not that bad in the grand scheme compared to what I have seen, based off my charts, right? Like we were up 1,300 this is back in like beginning of March, and then we were back down to only being up 900. So we gave back like $500 roughly. $400 or $500. We were up a lot here, gave a lot back, and then slowly grinded back up. This showed me it was unsustainable. And then the habits and the things that I almost felt and dealt with in this span caused me to get a little aggressive, a little bit greedy. And then when I started to see choppiness, or I started to get a little frustrated, boom, it opened the back door and allowed something to come in that I did not want. And it allowed the emotions that I had been managing well. Emotions are part of the game, but it allowed those emotions to infiltrate my trading and then affect how I traded. So I took some bigger losses than I should have. And I gave back a good chunk of those gains. And then we got back on the track of up to the right, nice and slow and steady, kind of doing our thing. So this is the problem, is that those really good streaks and those really bad streaks allow the back door to open almost, and for things to creep back in that you thought you handled, that you thought were never coming back, but they do come back. And so when you understand that the game, in my opinion, and I'm by no means am I some crazy, all I'm doing is I'm just talking through what I am seeing as someone who is, I'm not afraid to show the whole deal. Like I said, like back when I started doing these recaps and all that stuff, I was like, fuck it, like let's just go out and legitimately show every single trade that I take, and the thought process and the mindset, the mistakes, the success, all that, the whole 9 yards, and just see what happens. And I think it will be helpful, because there are not, I don't want to say no one's doing this. I don't care. I don't know. But realistically, from like the perspective and spot that I am in, not a lot of people are willing to do it because the numbers are small. It will not garner much attention, and you will do a lot of work, the videos and reviews, all the stuff, for very little financial gain. It's nicer when I can come on here and show a good month or a couple good trades and then plug something to sell and then make money because it gets attention. Or when I trade with a larger size, could be on a demo account, not tell anybody it's on a demo account, and then garner more attention and traffic and whatnot, because now, making $6,000 in, 5 minutes. That video gets more attention than these types of videos. But it's that problem is like the problem with that, and that's like the algorithm too, is that what it does is it limits the amount of content and the information on like the bad side, or like what I believe the more important parts of trading are, like the psychology and how do you handle the red streaks and like what do you do and how do you bring yourself back out of that stuff. You end up losing out on that and only seeing the positives and the winning, which a lot of times, like, the person who's either winning is either lying to you, or they're not explaining to you what like the massive missing piece of how they manage and how they minimize the downside, because they know more often than not, if they post a video saying I made 5,000 or I lost 3,000, the $5,000 video will do better and the $3,000 video won't, and the $3,000 video won't sell, and this one will sell whatever they're trying to sell you, right? So from a business decision, it makes sense and I see why it's done, but I was like, I don't care. Let's see what happens. And I hope this is helpful because you get a better understanding of like the thought process and how I view it. I'm by no means some crazy successful person in this space, but I think based off what I'm seeing, I'm very excited for the future. And I think there's a lot of promise with operating the way that I have been. Now, will this streak continue? We shall see. It's also something that I've tracked that the month of August historically has just not been very good for the way that I trade. Not for how you trade, not for the market in general, for the way that I trade. So knowing that and getting more data on that puts me in a position to say in the future, maybe, or not maybe, like we would trade less in the month of August unless XYZ was happening that made sense to trade. My setup is occurring more, and I had bigger signs in the market that we were seeing what I want to see for me to trade well. So hopefully that's helpful. This is kind of my approach and why, or the 6%, the 7%, it sucks, but check back in a couple of months, and I think things will, will oscillate back. I wouldn't be surprised if we oscillate back up and have a really good next couple of months. I don't know. I don't want to think in that manner. I just want to operate the same strategy and trust the results I've been getting and garnering over the past 16 months of tracking the strategy. There you guys have it. The only thing that I'll plug is TradeZella because they actually help me, and I use them to track, journal, and log all my trades. So I'll leave a link to them in the video description. There's actually a discount code, I think TC10, I think saves you 10%. It's like, please, like, use that if you wanted to. Like, it saves you 10% for the first 12 months. Like, you're paying monthly or you buy the yearly, which I pay the yearly. I literally pay for it. I paid $400 like last week just to re-up my subscription. If you buy the yearly, it saves you, some money. So there you have it. Thanks so much, and I'll see you in the next one. Peace.